Hello, friends. We are back to understanding what exactly we need to do in the markets. And in my previous video, I spoke to you about how the Nifty and Bank Nifty are positioned for the coming week. We need to see what actually is a trigger that actually halted the entire episode of bullishness. Now we are again back to twiddling our thumbs and finding out what we need to do to understand how to play the market. Well, in the coming week, we have got two interesting scenarios where we have the global entire markets trying to find out what to do with crude oil and also the currency markets. But these are going to be some very important scenarios which are at work in the coming week. But then the most important element which we need to understand is what RBI is going to do on Monday, which is something called as open market operations. Open market operations, for those who are not familiar, is a tool used by RBI to infuse liquidity into the system or to withdraw the liquidity into the system. So what we are going to see is a 10,000 crore liquidity which is being going to be infused into the system, and the aim is to keep a tab on the interest rates as well as the inflation so that we are able to actually see some growth in the economy. Well, RBI takes these measures from time to time and it is titled as Operation Twist. Well, it did the first round on December 23rd, and now once again on Jan 6th it is aiming to do something similar. Well, we need to see whether the impact will be there on the INR, but then looking at the way the INR is panning out, it does not seem that the overall picture is going to be anything great because INR has already started factoring the entire event. Well, we need to see whether post the event, when the results do come out on the 7th, we need to see whether the INR is having some bit of influence based on those decisions which are being taken in that period by RBI. So now let's go and take a look at the charts of INR as well as the charts of crude oil, which is going to have a significant impact on the way we are reading the markets and also the way the global markets are going to react on the crude oil itself. Let's go and take a look at the charts now. And when I step down into the charts, I see that there is a symmetrical triangle formation on the weekly charts. You can see here that the INR had a brief bit of relief way back in 2018, and then after that in 2019 there was large period of congestion after the 2018 scaling year where there was a sharp weakening. But then right now what we saw is some bit of weakening emerge in the mid of 2019, and after that from August till now it started coiling into a trend. And this is what I have actually highlighted in my article. It's also, you can take a look at the article, the link of which is mentioned below, and you can see here that I'm showing you that this is what prompted me to suggest that maybe the INR is not done with. I had come out with this report more than 10 days ago, and then you can see here that the INR had started gaining in some weakening here. And now what we are seeing as we ended last week is this triangle has given a breakout. And now if you actually take a look on the downside on the momentum indicator pane, you can see here that the positive DMI continues to hold its ground. It's not given up. You can see here that it is suggesting that overall prospect seems to be a bullish one, and it could prompt some more weakening here. So what I expect in the coming week is that once it crosses above a value area around the 72 levels, you can see that you can see here that I marked around 72. You can see around the 72 zone there is some constant supply which has been emerged, and that is what is keeping a check on the INR. Well, we need to see what really happens on Monday and Tuesday on the front, on the INR front. Till then, the INR continues to emit some weakness, and this could have an impact on the way we are perceiving the equity segment. So this is the view on the INR. INR seems to be showing some weakening. So those who are looking at the INR from a hedging perspective should definitely consider a move above 72 as a clear warning zone. Now we are seeing some charts of INR. So now let's shift some focus on the international segment. You can see here that I have the charts of crude oil with me here. Crude oil made a double top somewhere in the month of October 2018, and then since then the prices have cascaded quite a bit, and from 2018 low, the prices have continued to make a steady impact and head higher till April. After April, even the crude oil actually had a consolidation. You can see here a coiling effect, and here too we are witnessing a nice triangle breakout here. So a triangle breakout on crude oil is giving us a potential of more than 10 points from its breakout zone. So you can expect a move towards its former highs, which is somewhere around the 70 zone if things were to worsen. So next week is going to be a very important area where we need to see whether there is going to be a retaliation by the Iran, and that's going to be a very important zone to watch out for. So this was my take on crude oil as well as the INR. You can see here that INR has got a room of a breakout zone above 72 to move towards 75 if things were not shaping up well, and the crude oil has got a room to move towards 70. But then all this is in the light of what really is going to take shape. So if you're talking about the INR, we need to see what steps RBI is taking to contain the weakening, or is it going to have limited intervention. Otherwise, it's going to be a very tough times for the equity markets as we are trying to understand the whole market scenario. So these were the views on the INR and the crude oil. I'll be coming up with more such interesting updates on how the news flow is going to impact these kind of setups and how we can take a trade to participate in the markets. Thank you for watching. Have a good day.